Confused how to allocate your crypto investments? Today I'll break down a data-backed portfolio strategy that balances risk, growth and stability so you can invest smarter, not harder. Most crypto investors lose money not because they picked the wrong coin, but because they don't balance their portfolio. In this video, I'll break down how to allocate your crypto investments for maximum growth and minimal risk, step by step. Stick around till the end. I'll show you a simple allocation formula used by professional crypto investors. But why portfolio allocation matters? Volatility is high in crypto. One coin can swing 50% in a week. Spreading investments reduces risk. A well-allocated portfolio ensures you survive market crashes while still capturing upside during bull runs. Allocational principle number 1. Core holdings. Bitcoin and Ethereum as foundation. Historical data shows these coins recover faster after dips. Think of Bitcoin and Ethereum as the backbone of your portfolio. They are less volatile than most altcoins and offer long-term growth. Allocation principle number 2. High potential altcoins. Allocate 20 to 30% to promising altcoins. Criteria: strong fundamentals, active development and growing ecosystem. Altcoins offer big upside but higher risk. Keep your exposure limited to avoid major losses. Allocation principle number 3. Stablecoins. 5 to 15% in USDT, USDC for stability and flexibility. Useful for buying dips and staking. Stablecoins act as your safety net. They let you capitalize on opportunities without selling on core holdings. Allocation principle number 4. Experimental and new projects. Small percentage for high risk, high demand tokens. Always do your research. Treat as play money. This is the fun part. But never invest more than you can afford to lose. That's very important. Also, adjusting allocation over time. Rebalancing after large market moves. Example: Bitcoin surges, take profits, reinvest in altcoins. Your profit is not static. Adjust allocation as market conditions change. Also, diversification strategies across sectors. DeFi, layer 1s, layer 2s, gaming, NFTs, across geography and blockchain economics. Diversification reduces the risk of any single sector or chain collapsing your gains. Risk management in portfolio allocation is very important. Combine allocation with stop losses, profit taking and position sizing. Reduce losses during extreme volatility. Allocation is only part of the equation. Risk management completes the strategy. So here's a simple allocation formula that I would use. 60% Ethereum and Bitcoin, 25% top altcoins, 10% stablecoins and 5% experimental coins. This formula balances long-term growth with safety, adjusting percentages based on your risk tolerance. Now you know how to allocate a crypto portfolio like a pro. Build your core, diversify wisely, manage risk and rebalance regularly. Subscribe for more data-backed crypto strategies and comment below. How is your portfolio allocated today? Till then, see you in the next video.